Today we are discussing a graphite mining company of which the insiders have been buying a ton of shares on the open market. Specifically, the CEO has built up a position over time from non-existent all the way to now owning in excess of 3.1 million shares across his two main accounts. DCAing or dollar cost averaging all the way from 2018 up until last week in 2022. Of course, the company we are talking about is Gratomic, and the specific insider we're talking about is Arno Brandt, which is the CEO. Quick sidestep, just a couple of months ago I managed to get Arno Brandt on this YouTube channel and I was able to ask him a couple of super interesting questions. So if you haven't seen that video, I highly recommend it. Plugging aside, Arno Brandt is quite rare. The leader of your company having such extreme confidence and putting his damn money where his own damn mouth is by buying shares on the open market. Like I said, rare, maybe even medium rare. In fact, the most recent sale of any shares by any insider I could find was all the way back in April 20th, 2021. That is more than 1 year ago. And even then the CEO Armando, but he sold these shares on the same day he exercised a ton of options. Quick explanation. Companies often give employees and management stock options to motivate and reward said employees. Stock options ensure that the goals of the employees and the goals of the investors are aligned. When everyone working at a company is a shareholder, everyone has the same goal, that is increasing the value of the business. But of course, instead of giving shares away for free, finance people just had to invent the most roundabout way of doing things. To make it as complex as possible, employees get a stock option, giving them the option to buy a certain amount of shares at a certain price, the strike price, until a certain date. Often stock options are priced significantly below the current value of the stock, so that employees at least get a discount on their shares. In this case, Armando got a couple of 15-cent options, which he exercised when the company was trading at about 50 cents per share. Of course, whenever anyone exercises an option, that is a taxable event. Armando had to pay taxes on the difference between 50 and 15 cents a share, so he had to pay capital gains tax on 35 cents a share. So taxes might just be the reason why he sold 100,000 shares on that exact same date. Besides, Armadillo still owns a cool 500,000 shares today, which is quite the sizable position. So that was a quick lesson on stock options I didn't really expect before planning this video out, but it was needed and hopefully you guys appreciate it. Before Armando, the first sale is Stephen Gray, who halved his position during March 2021. And the first sale before that one is Walter Luke during January 2021. We can summarize these findings by saying the following. The insiders of this graphite company are putting a lot of their hard-earned money into the success of this business while not selling many shares at all. And that, my favorite people, is a vote of confidence. Like we saw during the example of Armando, there are many reasons to sell shares of a company. But for insiders, there is just one reason to ever buy shares, because they are confident. Our CEO actually bought another 20,000-ish shares on the 15th of June, meaning that across of his two accounts, he now owns in excess of 3.1 million shares of the company. Let's just say that he is confident. And Arno putting his money where his mouth is only reinforces my confidence in the company. Whether it should reinforce your confidence, well, of course, that is for you to decide. Insider buying is meaningless if you do not understand the business. If you do not support the business plan and its fundamentals all the way. So people, always do your due diligence. So that was the video. Thank you so much for watching. I love you all. Peace.